Welcome to this edition of Feeley Driscoll's videocast. This is the third segment of a three-part series entitled Managing Fraud Risk in Your Organization. I'm Mike Downey and I'm an audit director with Feeley Driscoll. In this segment we're going to discover some various items regarding expenses and how fraud may be perpetrated in those areas. Additionally, we'll talk about some miscellaneous areas of fraud that should be controlled as well within small and mid-sized organizations. Within expenses, employee expenses should be audited on a monthly basis. At a minimum, these should be reviewed on a monthly basis and then potentially selected and audited periodically. This should be performed either by management or by ownership. For management expenses, those reviews should be performed by ownership. Most frauds would also be detected or have a better chance at being detected through a monthly review of monthly and year-to-date expenditures and a comparison to budgeted expenditures. For any fraud that's perpetrated, there is generally a fluctuation of the actual cost to date that exceeds the budgeted amounts, which would be unexplained because the core purpose is fraud. Ownership should be performing a monthly review of all month and year-to-date financial statements, particularly as it relates to overhead expenditures and comparing those figures to budgeted amounts. For any fluctuations, these should be brought back to the finance department to explain, and for any explanations that do not necessarily make sense, ownership should be following up for more support. For any new vendors that are created within the general ledger system, there should be approval either by management or by ownership. Phony vendors is a common way to perpetrate fraud by setting up a phony organization as well as a bank account for that organization and then cutting checks for direct expenditures such as materials, cost of goods sold, etc. When expenditures are included in cost of goods sold, they are less likely to be detected. In the same vein, any expense items that are paid multiple times, so any expenditures of identical amounts, should be investigated for the reason behind that. This can be done relatively simply by sorting all cash disbursements and either viewing or utilizing Excel or IDEA to identify multiple expenditures of identical amounts. Lastly, this is fairly common sense. Manual checks should be minimized, and in the event that manual checks are cut, there should be a solid record for the reason that manual checks are being cut. In some industries, this is necessary for either permits or amounts that aren't necessarily known until the actual expenditure is being incurred and there's a need to cut the check immediately. However, outside of those rare instances, there should not be manual checks being cut. All checks should be cut via the general ledger system. Lastly, a couple of other areas in which our organization has encountered fraud. The first is that without ownership review of purchases by vendor, there is the chance that certain vendors may kick back to employees that are empowered in the area of purchasing. This is easily mitigated by ownership authorization of any new vendors, and also that any expenditures by vendors should be analyzed on a regular basis. If not annual, it should be done quarterly. Any large increases or decreases should be explained by the individuals responsible for purchasing, and any new names, if they're not necessarily authorized up front, should also be investigated. Generally speaking, fixed assets has never been a substantial area for fraud because fixed assets generally refer to leaseholds, vehicles, etc. There aren't many instances of fraud in which an employee purchased a number of vehicles for themselves. However, over the past number of years, the primary components of fixed assets have become more valuable to employees. So, for instance, organizations that have a large number of computers or that provide iPads for employees, phones, iPhones, etc. These items are easy to miss as far as the number that are being purchased. So any additional purchases outside of the budgeted amounts should be investigated. Lastly, control over supplies and inventory. As far as inventory goes, generally speaking, we always look at anything that's of high value and small in size. The largest risk for theft and for fraud clearly relates to anything that can be easily, that has high value outside of the organization and also that can easily be removed from the organization. The controls over those items are fairly self-explanatory. Cameras, whether or not they're actually working. Physical security such as cages, things along those lines should be utilized for something that's of substantial value. As far as supplies go, the same logic should be used when we talk about office supplies. The risk of theft doesn't necessarily ride with pens and pencils and paper, but there are some high-value office supply items, think thumb drives, other items that are of high value and are very easy to remove from the office. To go along with this presentation, there is a small business internal control checklist. I recommend that you utilize the internal control checklist to take the temperature of your organization as to whether or not fraud risk resides and whether or not you are effectively controlling those fraud risks. This checklist is located as part of this presentation in the podcast section of our website at www.fdcpa.com. If you think that you or your organization may be subject to fraud, or to evaluate your organization's susceptibility to fraud, please contact our office at 888-875-9770 or visit us on the web at www.fdcpa.com. Thank you.